Hi guys, welcome to today's episode. Um, so quickly today I want to quickly talk about position trading, and then someone wanted to me to show them the way to take how do they identify and then take long-term trades. Um, how can they identify and take long-term trades? So today basically um is all about long-term trade setup. All right. So we are looking at long-term trade setup. Okay. Okay. So, um, for instance, if you give me this chart, okay, to put quickly annotations on this chart, what I can quickly do is this. So I'm putting annotations on this chart. Just a quick one. So, for instance, you have been given a chart. What do you do? So all the annotations I'm putting, I would definitely have to explain. Okay? I will quickly explain every single thing that I'm putting on the chart here. Whoa. Quickly. Is that how to spell imbalanced? Or is it IN? Whatever it is, it should be. Okay. Alright. So I have quickly identified things on this chart. Um, so as a long-term trader, and then what I'll do is I'll quickly pull my fib. Okay, let me take down this fib and go to my. So sorry, quickly, I'm just picking some values, and then I'll quickly explain all that there is that I'm trying to do here. Okay. All right. So if I had pulled my pep, let's see where it would be. Okay, right, exactly where I'm expecting it to. All right, that's awesome. So I pull my fib, price retraces on the 50 level, and then we are good to go. All right, so now this is beautiful for swing trader. For a swing trader, a position trader, you are not always going to watch the chart and see all the dancing that it's doing, but you just place your trade and then you sit back and you watch. Why all this on the charts? Why all this on the charts? Why all this on the charts? So quickly, let me explain myself. We saw price moving from a particular high. From this high, it came down to this low, came from the high, reversed to a low, another high, a low, high, low, high, low. Now, anytime we are in a market, as a position trader, one of the things you should look for is this: the market profile. The market profile. What is the market profile? What is the market profile? What is the market profile? We are looking at the market profile being either there are two. It could either be the profile could either be one, bullish, or this is for a position trader. You don't need a lot of things. Two, bearish. So for a position trader, these are the things you should be looking for. Either the market is bullish or bearish. So the profile we have here is actually a bearish market. When we have a bearish market when the highs that the swing highs that the market forms, it forms a lower highs. Okay, the market will be forming lower highs. Hello, is my recording going on? Okay, all right. So the market will be forming lower highs. Sorry, the market will be forming lower highs. Okay, to this point, and then it comes down to this point. Is it still forming the lower highs? Yeah, it is. It comes back to this point, and then to this point, and then what happens after this low was formed? The market moves higher than it is supposed to. Usually, this is what the market should look like. It should have a high when sorry, it should have a high, have another high here, and in that order it should be descending. Okay, so anytime we have any of the staircase or the highs breached, for instance, like this point was a point that the market was breached. Okay, anytime we have, this is what I call BMS. What does it mean? There's a break in structure. Okay, sorry, I can't pick it up. I wanted to relocate it. Okay, so this is the BMS, or break in market structure. Let me try and get this thing out of here. Okay, let me try and get this. Why is this alphabet not responding? Oh, we can't waste our time with this alphabet. Okay, this is a structure, but actually this is the reference point that I'm trying to. This is immediately the market, this structure shift. This is our reference point, the red line here. This is our reference point where the market structure, any point above this is where the market has shifted upwards. Okay, so for instance, those who believe in trend line, oh, the market is trending, so it's selling, and then it's on the trend, and it's on the trend. How would you even know that the market is going to begin a new trend? I don't believe in trend lines. There's my mentor taught something about trend line phantoms, okay, which is not necessarily having all these lines. Do you think that the big banks would juggle their monies with these trend lines? No. Okay. So for instance, with your trend lines, what it means is the market is bearish. This way the market is bearish. Okay, but how would you know if the market has shifted course and is going the other way? Okay, how would you know? All right. You'd only know if the market has shifted course when it breaks any of the swing highs. Okay, good. So at this point, the market broke the structure, and then usually, as a swing trader, whenever you see this pattern happen that a structure is being broken, the next thing is look for an entry point. So here, a structure is broken. A bearish structure has been broken. Now you look for an entry. So price would automatically retrace. When price retraces, price can retrace from this point. You could have traded up higher. Any point that it trades, we expect the retracement so that we can pick the bottoms and enter. This is what institutional market or traders do. They pick the bottoms. Price could retrace here, could retrace any point, anywhere along this area, okay, before it rallies back up. Now, necessarily, where would price retrace? So this is where you begin to look at where price should retrace. Now, here I put what we call the bullish OB. Okay, bullish OB means that a bullish order block. This is an order block. Why do I consider this? Why do I shade this area and say it's an order block? Okay, let me zoom out. Okay, or let me go to this chart and explain from this point. You get a clearer picture from here. Okay, so let me delete this. Why do I consider this area, this shaded area, as an order block? Why do I consider all these candles here as an order block? Why? The reason is simple. When you have a group of all same bearish candles trading down and a group of candles trade up, or price trades up above it and it breaks a structure, or the last bearish candle, okay, or the last bearish continuous candles forms the order block, especially when there is a breaking structure, depending on the situation at hand. If we had this particular candle as a bullish candle, necessarily I would have considered my order block to be the last bearish candle. Why? Because that is the last candle that actually rallied price up. But here's the case, we had this as continuous, we had all these ones as continuous price that rallied the price up. Okay, so basically when we have continuous bearish candles and then we have a breaking structure, all the bearish candles continuously, they form the order block. Now the question remains, so what gave me the idea or the clue that price would reverse at this particular point that it reversed? Okay, now let's go back to our chart. What gave you the clue? What gave you the clue that, okay, price would reverse at this point? Okay, now let me take this order block delineation from there. Now let's go to Okay, let me put the line here. So let's go down to a 4-hour time frame. So now as a long-term trader, when you have one, this is just one of the ways or one of the means to execute a trade. There are a lot more ways to execute your long-term or position trades, but I'm just giving you one of the clues, especially one of them that works on volatility indexes or the synthetic indexes. Okay, these are profile or strategies that has been taught by my mentor, and it works so perfectly. And here I am on volatility 75 trying to show you how it actually works here. All right, so now let's go down to a smaller time frame, a 4-hour time frame. So on the 4-hour time frame, what do we find? Where were we? Okay, so we saw that there was a breaking structure here. Price rallied up. Now price is trading back down. Necessarily, where are we expecting price to trade? Where do we expect price to where do we expect price to necessarily trade and then get bounced off? Price could have traded down, price could have traded down this way or this area. Now let me give you a few things that are there that gives the clue that price could have traded that way. So assuming we have something like this, we don't even know what is actually ahead. Now, number one, we have a fair value gap here. Number two, we have another fair value gap here. And number three, we have another big fair value gap here. We have another big fair value gap here. Okay. I missed the fact that we have this assuming we can't see what is ahead and all that, so we have this fair value gap. Let me just think of this. Okay, so we have this fair value gap, and then let's see all this area is imbalanced. Okay, so we have this big area, imbalanced area. All right, and then what happens? So if we have this, number one, beyond the fact that we've seen that there's an order block here, we have seen that there's an imbalance here and there's another imbalance here as well. Price just traded this area once. There was just buying, there was no selling, apart from the fact that this small area had some sort of selling and buying here. But this area and then this area, we all considered as imbalanced. Okay, so this area as well. So necessarily, price must close in on the imbalanced areas. Coupled with the fact that we have an order block let me quickly check this. Okay, it's working. All right, so we come back up here. Now let's go down to our 4-hour time frame, as I said earlier. So we're looking for the imbalanced areas to be filled in. Now here is the key. Here is the key, guys. Here is the key. I'm giving you all this for free, okay? And I believe I've learned a lot of things from my mentor for free, so I also have to give out for free. He's been so much of a blessing, Michael, popularly known as ICT. I really love him so much. All right, so let's look at it. Let's look at this. Price had actually traded this point, rallied up, broken a structure. Now my question is, fine, we have a fair value gap here. Price has gone up, so we are expecting price to close in on the gap, right? When price is closing on the gap, what else is there to be done? It must come down and closing on this gap. But we are saying that this whole area is an order block. Now we have a bigger picture, but what of the smaller picture? We have a smaller picture as well. Now here we have another nice order block here. We have a very nice and beautiful order block here on the 4-hour time frame. And this is actually the order block on the smaller time frame that actually propelled price. This is what actually propelled price to take down. This is what actually propelled price to rally and take down, break the structure. So it is a price point that the market would respect. Just before the break of the structure, let me take away the FVGs. Just before the break of the structure, what happened? Just before the break, you realize that markets rallied quickly. There was some sort of down candles here, and these down candles are the other blocks. And what is it? You know, these are price points that institutional sponsorship comes in. The institutions, this is where they sponsor price. Okay, when you see down candles this way, they are buying. This is the point where it shows that institutional orders came in. They began to buy. When you see they are hedging their funds, they began to buy. And then boom, they begin to shoot the price up. And it broke the structure. So this is a clear order block. So this is where you make your entry. You put your stop below it. You enter here. Long position trader. You are good to go. Yeah, you are good to go. And when price begins to rally, where do you usually scale off? Let's not talk about that for now. Let's go back to our time frame. Now we've seen an entry. We've entered the trade. Now on the bigger picture. So where should we consider price to go, and then where do we consider it to rather where do we consider price to go, and then where should you also consider price to take profit and then exit the market and all, you know. On the normal, I usually would expect price. On the normal, I would usually expect price. On the normal, I would usually expect price to come take down. First of all, we've taken down this high. Secondly, it came to form an equal high with this one. Now we have to take down this high and then take down this other highs to here, which has equal highs, until we get to this point where there's a price imbalance. We can't just penetrate into an imbalanced area just like that. I'm sure when we get here, we'll get bounced off a bit. But for now, as a position trader, if you had entered your trade here, you would have already been in a safe havens. All right, based on a market structure shift. This is just as simple as that. A market structure shift or a break in market structure. This is one of the basic entries that you can have as a position trader. You can always wait for this setup. It will come over again and again and again and again and again. Where do you now scale off? First of all, you can scale off when market rallies back to where it broke the structure. Just on the bodies. When you are trading volatility index, don't give attention to the wicks. Consider the bodies as an exit point. You can scale off here, number one. Number two, at this point, you could have scaled off here, taking something off like that, and then it keeps on and on and on. So this is on the bigger picture. I'll record a new video on the smaller time frame so that we have a breakdown of what has happened so far in the shorter time frames and then on the daily basis, so that we know our way forward. All right, if there is any entry, I'll give you a clue. All right, so thank you for your time. I hope you subscribe to the channel. Give me a thumbs up if you like the video, and then also like the video and then subscribe and comment if you have any question. I have a Telegram group. I'll post the link so that you can join. All right, so I wish you all the best in your trading, and then enjoy your day.